Looks like the narrative is starting to change. Wall Street Journal put out an article a couple of weeks ago saying the surprisingly quick recovery of the housing market suggests that the residential real estate downturn is turning out to be shorter and shallower than many housing economists expected after mortgage rates soared last year. Now, in this September market update for San Francisco, we're going to take a look at these recent trends in prices, some news and forecast around interest rates, and how it can impact you buying or selling. Make sure you stay until the end. I'm going to be giving out a tip on a particular market sector that I think you should avoid to keep from losing money. Now, we've seen the article saying the San Francisco and Bay Area markets are down 15% or 20% year over year. For the first time since June of 22, we've actually seen our first increase in appreciation. Now, this is for the Bay Area as a whole, and I know what you're thinking that, Kev, that's not the city specifically, but the city did play its part in that. San Francisco isn't in the positive just yet, but we are seeing the negative year-over-year gaps in appreciation get smaller and smaller each month. Naturally, if that continues, then we'll be in the positive soon. Now, are prices increasing that rapidly? They are increasing, but it's at a much slower rate than what we've seen over the last few years. You also have to keep in mind that these are year-over-year comparisons, meaning you're taking a look at this month and comparing it to the same month last year. So when you look at an April of 2023 versus an April of 22, that was the peak of a heightened and abnormal pandemic boom. These were two very different markets, so that's going to cause a huge gap in appreciation. Nonetheless, if you take a look at the data, you can see that the gaps in appreciation are starting to decrease, showing us that we're starting to recover from this downturn. So for perspective, single-family homes are currently down 10% in value year over year. Just 2 months ago, that number was at 20%. Condos are down about 5%, and 2 months ago that number was 11%. That's a 50% change for both of these, and these changes occurred during one of the slower times in our market. Right now, the median sales price for single-family homes is $1.5 million, and condos is $1.1 million, both of which are down less than 1% month over month. Sales volume is still down about 30% year over year. However, we did see an increase in the number of new listings that hit the market. As a whole, the city saw a 1.6% increase in the number of new listings in August, but on a more micro level, it was single-family homes specifically that had a 7% spike in the number of new listings. So that was shocking for the month of August, but it was definitely pleasing to see because inventory has definitely been lacking. The good news is that historically, September has been the single month with the most new inventory. If you take a look at the peaks on this graph for new listings, that is September at the top of every year. For those of you that are currently shopping for homes but you haven't been able to find what you want, obviously this gives you something to look forward to. 30% of condos sell above the list price, while 65% of single-family homes do the same. Single-family homes are averaging about 7% more than what they're asking for, while condos are averaging just shy of their list price. One interesting thing to note is the amount of cash buyers that we've had in 2023. This is a stat that does ebb and flow with seasonal trends, but these are the highest levels of cash buyers that we've seen in the last 8 to 10 years. Now, for us here in the city, it is something that's a little bit more common, being the level of wealth that we have here. We've got the second most amount of millionaires in the country and the most billionaires in the country. With rates being as high as they are, those who can will completely forego the road of having that high interest rate. Over the last month, rates have been the highest that we've seen since November of 2022, peaking out at about 7.5%. There's recently been a lot of speculation around rates and where they're headed. Obviously, this has been a million-dollar question. Everyone, and I mean everyone, Fannie Mae, Goldman Sachs, Morgan Stanley, Mortgage Bankers Association, National Association of Realtors, Moody Analytics, etc. They all agree that rates are coming down. The timelines and how much definitely vary. They said anywhere from 5 to 6% and at any time from quarter 1 of 2024 all the way back to quarter 3 of 2024. The overall consensus is the same, and that's rates will come down. Now, I know there are a lot of you out there patiently waiting for this to happen. Let me prepare you for this in the event they do. If they drop these rates, the floodgates are gonna open. We are already lacking inventory now. The minute homes become more affordable, there's going to be tons of buyers from pent-up demand out back in the market. We've actually seen this every time rates have dropped in the past year. Every time it happens, there's an increase in home loan applications. One of the main things being said is that lower rates would entice those sellers to go ahead and make the move that they've been waiting on. That is possible for those owners who have more of a need. Now, while the likelihood of turnover is slightly higher than those in your more typical suburban areas, we have found that the median duration in a home has been steadily increasing over the past years. So maybe those sellers go ahead and sell, maybe they don't. Is it possible the Airbnb crackdown comes to California and creates more inventory? Are either of these enough to make a difference? If not, competition is going to stay fierce and it's going to put further pressure on prices, causing you to pay more for the home. Now, I've always been a firm believer that you don't wait to buy real estate, you buy real estate and wait. So if you're capable of buying now, you'll get a better price today, which is something that can never change. Then you can refi when the rates get better, ultimately getting you the best of both worlds. Ultimately, you got to do what's best for you and your family. But if you can buy now, great, it's a win. If not, great, do what you gotta do. Sellers, if inventory stays low and rates drop, you're gonna have a huge profit opportunity in front of you. The thing for you is that you're gonna have to decide, would it be best to make less profit and pay less on the next home by making the move now? Would it make more sense for you to wait till rates to drop for you to make more profit, but you'll also have to pay more on the next home? Now, not long ago, I was asked a question about some things that I would avoid to keep from losing money. And truth be told, really, everything is on sale right now. Everything is priced at 2018 prices or some things even further back. But there is one sector that has continued to see gradual decline since the pandemic hit, and that's one bedroom and or studio condos. Now, depending on the amount of space it has and where everybody's mindset is since the pandemic hit, it's just something that could be difficult to sell down the road, or you might not make a ton of money in it. I would stick to at least 2 bedrooms and preferably a 2-bed, 2-bath, or at the bare minimum, a 2-bed, 1-bath. Now, I hope this information was helpful. As always, if you're thinking about making a move here in the city, my team and I would love to be your real estate resource of choice. Send us an email at kevin@kevinswanigan.com. Let's make a connection that moves you. If you want to see more videos, click here. And if you can't stand the idea of missing any upcoming videos, subscribe. Peace.